Is Disney a Mickey Mouse stock? We'll take a look. Everyone watching this program knows what Disney is. It's a global corporation. It has a market cap of about $149 billion, which is not nothing in this, even in this inflated age. It's a very successful company. What does it do? You know what it does. It has theme parks. It has newspapers. It has networks. It has movie companies. You name the company, Disney probably has a hand in it. Is it successful? Very successful. Let's take a look at a stock that has done nothing but kind of grow since 2009, I would say, down around $20, $30. It's went up over to $100, you can see, earlier this year. Is that a success? Yes, it's a huge success. What drives that success? One thing, cash flow. Cash is king when it comes to corporations, when it comes to stocks. And in this period, when you see the big run-up in the company's development, what have they done? Cash flow went from $5.9 billion a year to something like $11, $12 billion a year. A very sizable increase. What do they do with that cash? They reinvest it in acquisitions. They bought Marvel Comics. They bought some others. There's going to be Star Wars at some of the theme parks. I don't know all the uses of the cash. I can say that they're not scared either of returning that cash to the shareholders. Another good sign of a good management. So with Disney, you have a diversified portfolio all over the world, Japan, Paris, Florida, California. But you also have a management, I would say very professional management, dedicating to rewarding its shareholders with the success of the enterprise. What does that mean for you? It means that the earnings per share have grown steadily, and it means the dividend has grown steadily. It's not a huge payout compared to, say, other stocks that you might see in the market. It's a successful 10, 20, 30-year record of success when it comes to returning cash to the shareholders. Is it a company you want to have in your portfolio? I say it is a company you want in your portfolio. At $92 a share, do you want it in your portfolio? That's the question. That's 15, 16 times earnings. Is that cheap? Yeah, for Disney, it could be very cheap. It was up at $120. Now it's at 90. Maybe it'll be at 86 when you buy some shares. Maybe it'll go back to 100. I'm not in the prognostication business. I can say that Disney's a successful company. I can say it's a professional management. I can say at 14, 15 times earnings, you can make money if you're willing to hold this stock over a 5 or 10-year period. Put it in the portfolio and maybe forget about it and come back and look at it when you'll see it at the $200 level. It's not a dramatically new company in terms of what its products, but it's always reinventing itself. And I think for that, it needs to have a place in your portfolio. It's all the time we have this week on The Investment Advisor. I'm your host, Matthew Stevenson, in partnership with Dukascopy TV. Remember, money can take care of you. It cannot take care of itself.